Hey guys, Joe Frank here, market analyst for YouTrading, and in today's video, we're going to be taking a quick look across markets, talking about some of the themes that are in play, some of the moves we've been seeing this week, and I think the best place to start is probably with the S&P 500, or on the screen here I've got a CFD that tracks the price of the S&P 500, uh, gradually ebbing higher, still supported within this recent uptrend, which you can draw a link in these recent lows. This is a fairly decent short-term uptrend, to be honest. Maybe you could draw a bit of a trend channel like this. Not the most clear-cut upwards trend channel, but if we are able to get above the 50-day moving average at 4,016, which is currently acting as resistance, then you got to think the door is open for a grind higher at the very least to earlier monthly highs in the 4,080 area, and perhaps even above 4,100. Why are we grinding higher? Well, there's two potential things that we could point at here. I mean, over the weekend and earlier this week, we've had a couple of positive announcements regarding sort of the banking situation, like the SVB buyout, the fact that US authorities are considering additional support to prevent another or further US bank collapses. Particularly, it would be aimed at helping out First Republic Bank, but it should help all banks, really. And then recently, we had this news. Where was it? The Credit Suisse, which just got, or UBS, sorry, which just took over Credit Suisse, has rehired this guy called Sergio Moti. I probably butchered that name, but that seems to be boosting confidence in bank stocks over in Europe. That's the key thing there. So a couple of good headlines, pretty much boosting sentiment this week. Decent technicals, could get better, like I said, if we get above the 50-day moving average. The other thing that's potentially boosting stocks is not year end, quarter end flows. I mean, it is the final trading day of the final two trading days of the quarter, tomorrow and the day after. Stocks, since the start of the year actually have performed pretty well, which, often you see sort of profit taking as people move out of stocks, rebalance portfolios, go back into other asset classes which have performed less well. But then again, I mean, if we look at the 10-year yield, that's actually down on the year. So bonds have performed pretty well as well. But listen, you can't read too much into quarter end, I mean, even month end, but definitely quarter end and definitely year end moves, because these can be driven not by fundamentals, but more by just like large scale institutions rebalancing portfolios and pushing the market around in doing so. So yeah, don't get too excited reading into these moves. But moving on from the S&P 500, you can see the dollar continues. I mean, it's going sideways, but still lower on the week, continues to gradually fall. It's in this short-term trend channel, which I've got drawn up there. Also, there was a nice recent retest of, you can see it was in this downtrend. It broke above that downtrend, and we've now had the first successful retest of that downtrend. Now, does that mean we're going to go like that? Well, if we're talking about an interest rate cutting cycle from the Fed later this year, if the US data does start to turn amid banks becoming more basically conservative with their lending, which could weigh on economic growth, could bring inflation down at a faster pace. Well, I mean, the Fed was the most hawkish of these major G10 central banks in the hiking cycle, so that means the dollar's got the most to lose if the Fed switches dovish. So I still think, especially in wake of the recent break below the 50-day moving average, then the fact that we found such strong resistance when we tried to retest it at the end of last week, the outlook seems tilted towards further dollar losses in the short term. But again, like I said, quarter end flows, don't read too much into things. What else we got? I mean, I already showed you the 10-year. Just have a quick look at that again. You see it's bounced back a little bit as sentiment regarding the bank sort of situation has improved, but we're still substantially lower versus where we were at the start of the month, around 3.5%. We had gone above 4. The 2-year yield, telling a similar story. It's holding above 4% for now, having been as low as 3.8% where do we go? 3.55 last Friday, but those recent positive bank headlines taking off the edge of those crisis concerns. But then again, still way down from where we were earlier this month. Like earlier this month, we actually went above 5% for the first time in like decades. Um, Gold hovering, forming a bit of a pennant structure actually. That's something to watch. That'll be a trade idea video, I'm sure, in the next couple of days or weeks. I'll be talking about as this pennant structure develops, I'll then come up with a bit of a thesis as to which way I think it's going to break and what levels to be targeting. But just keeping an eye on gold there for now. Oil's been moving higher. There's been some supply concerns back in the or some headlines regarding the Kurdistan region of Iraq, some supply disruptions there, which have been supporting sentiment. But then the dollar's been weakening and risk appetite's fairly decent at the moment. So that's been helping the dollar as well. Sorry, it's been helping oil as well, which has pushed back into these ranges, which had been in play for a very long time after that brief little dip below. Um, the economic outlook's still going to really be the main driver, I would think, unless things really start heating up on the supply front again. What else have we not looked at? That's pretty much everything, to be honest, guys. Let's take a quick look at the calendar because we do have some key events coming up later this week. Tomorrow, we got a sprinkling of the first countries in the Eurozone posting their first estimates of CPI for March. Should be interesting, of course. US jobs data, final estimate of Q4 GDP also should be interesting. Then you got the actual official Eurozone as a whole inflation data due tomorrow. But the main event, sorry, that's on Friday, due on Friday. But the main event, I think, is going to be the core PCE price index data coming out of the US, which is the Fed's favored gauge of inflation, expected to ease back to 0.4 from 0.6%. But that's still elevated, guys, 0.4%. That is not the Fed anywhere close to winning their battle against inflation, basically. This needs to be around zero point 0.2 for them to be able to declare victory. Well, it needs to be around 0.2 for a whole year, because that means inflation of close to 2% before they can claim victory. Sprinkle of Fed speak and some and ECB speak. And you also got Treasury Secretary Janet Yellen, the chairman of the SEC, a bunch of other officials speaking this week. They're getting grilled by Congress basically over some of the recent bank collapses. But yeah, a few things to be keeping an eye on. But yeah, the core PC I think will be the main market mover, if anything, because that does have the power to really impact Fed tightening expectations. But yeah, guys, hope you all enjoyed the video. Hope you all found it informative, and I will see you all in the next one.